What's up, my people? It's your boy Jonas Kid FX. Welcome back to this video. Sorry for the small break we had. So in this video, I'm going to continue from where we stopped concerning risk management and psychology. So basically, I'm going to be laying emphasis on psychology. All right. So before now, we've done like introduction to risk management and psychology, and then we dive deeper by showing some giving some examples and introducing you to a tool how I am able to manage my risks, the SkyAmazon calculator, which I introduced to you guys. If you have not watched these two videos, this is the first video, risk management and psychology, and you can see this is part 2. So this is more like the third video I'll be doing on that. So if you know you've not watched the video, ensure you come to the page. These are the videos there. And then if you're still having issues on how you can do analysis, these are videos on top-down analysis. There are other videos when I talk about price actions and all. So ensure you visit the channel to probably sort yourself out in watching some of these videos to grow in terms of knowledge and productivity as far as Forex is concerned. You really need these videos. Secondly, don't forget to join the Telegram channel. For instance, some of the analysis that I've done today, I dropped them on the channel, as you can see, both on gold. These are synthetic pairs, and this is currency pair. So this is gold, this is volatility 25 index, and this is step index. If you've not joined the channel, don't forget to do that as well. Let's dive into what we have for the day. When we talk about psychology basically refers to how you behave towards your trade. Okay, that's just the simple. I don't want to give a complex definition of what it is. Now, you might be looking at it that, oh, what is this thing? Like, how important is it? Before now, I've laid emphasis on the 3 major tools you need to be profitable as a Forex trader. I talked about technical analysis, which is my ability to read this chart, interpret it, go to the higher time frame, break the market down using top-down analysis, and then able to have a directional bias of where I anticipate the market to go. Now, the other two, which is what psychology and risk management, I told you that these two, psychology and risk management, carry 90% of what you need to be successful. What that means is that you need more of this psychology and risk management than you need the technical analysis. You see, I have also said to you guys before now that the difference between a trader and an analyst is execution. And when you come to execution, you now have to put in place what we call psychology. You now have to put in place what we call risk management. Okay, I hope you get that. Now, when you are an analyst, you only read the chart, you only interpret the chart, you only find a probable bias of the market, but then you cannot possibly execute trade because you will be lacking the psychology and your ability to manage risk. So you can be a good analyst and still not be successful as a Forex trader. So it's important for you to pay close attention to risk management and psychology. Now, I'll be giving out some basic things you need to ensure good psychology as a Forex trader. Now, what are those things you need? When you enter a trade, before I dive into that, you really need to, as you're watching this video, or probably after watching this video, take a few moments to observe yourself. Ask yourself that since I've been trading, how have I been reacting to my losing trade? How have I been reacting to my winning trade? So when you observe yourself, you can tell, you will be able to, like, one thing about psychology is that it is between you and the chart and the market. You cannot read it from, no one is going to impose a psychology on you. The best you can do is to observe yourself and check what you like, just like you having your likes and dislikes. Okay, you are trading because you want to gain financial freedom, you want to be a boss of your own. So you have to ensure that you put that in place, because you are the only one that can control yourself. You are the only one that have full control of yourself. So make sure that you pay attention to how you react to your trade, how your risk appetite, know how much you are willing to so those are just things that you need to put in place. Now, for you to have good psychology, there are things you need to do. Number one is have a good mentor. You know what I'm saying? You might be wondering why I'm starting with having a good mentor, even though I said psychology has to be with your personal relationship with the market. Now, the importance of having a good mentor is this. The Forex journey is a lonely path, and it is not so easy for you to walk in that path alone. So there's need for you to have someone that you can look up to, someone that you can always run to whenever you feel down. Because honestly, the market is going to test your patience. You're going to test your emotion and all. And there are times in the market where you feel down, probably because you make some mistakes. You feel you shouldn't have made this mistake. And then instead of carrying the burden alone, there should be someone who can give you a listening ear, rather than meeting someone that will tell you, man, you have tried for this. You are supposed to quit this by now. I don't know what you're still doing here. So you should have a good mentor, and not just a mentor, someone that will have your best interests at heart, someone that can go beyond its own advantage to ensure that you are all right. So that about that. I've said that. So how will having a good mentor help you? A good mentor is going to help you shape your psychology. Okay. For instance, if you take a trade and the trade you hit SL on that trade, there is this sense of, there's this bad feelings that comes to your mind. And sometimes it will be so, if the losses are big to an extent, there's this thing that will tell you, that will keep ringing in your head. I hope I've not made a mistake. Did I choose the wrong path? What should I do? I think I should quit. Those kind of things will come in. But when you have a good mentor, a mentor will be able to ask you questions like, okay, you actually tried by making this analysis. You actually tried by going beyond yourself to take this decision. But then what are your reasons for taking this trade beside this analysis? Do you have any other reason? Do you have a reason why you decide to enter at this point and not here? What are your reasons? So a good mentor will be able to ask you questions that will help you shape your psychology. That is the importance of you having a good mentor. Then the other thing, you need to understand that in the markets, anything can happen. All right. No matter how good you are in analyzing the charts, no matter your psychology, you can't move the market. All right. So that is why it is always important that you don't have to act. You have to react to what the market is doing. When you run your analysis, don't rush the market, allow it to play out, and then probably follow what the market is doing. Now, you run an analysis probably a day back, and your analysis is telling you that the market was going to sell. What you need to, and you come back the next day and you see that the market is no longer saying it's now buying. You don't have to be rigid that my analysis must be what it should play out. Okay. What you need to do is update your charts, look at what is happening. Why is this market not selling again? And if the market is buying, believe me sincerely, you have to trade alongside with the trend, because there is this popular saying that states the trend is your friend. All right. You don't have to do otherwise. When you see a market buying, it means that is where orders are in place. That is where their buyers, or yes, that is where the masses are placing their order. So you have to join them in doing what they are doing. I told you before now that it is important for you, according to Jones, that you pay attention to how much you tend to lose in the market than how much you are gaining. So what does this mean? Instead of looking at the profits you're going to make on a trade, ensure you think or pay attention to how much you are risking from taking that trade. So when you ask yourself, before placing this order, you have to be convinced that you have already lost this money, and see how you will react to it. When you see that your reactions are not what you can control, it means that you are not okay in taking that trade. What it means is you have to try a possible way to reduce your losses. Okay, now look, for instance, this was the analysis I made. According to my analysis, I am to wait till the market come to this particular zone, tap into this particular order, and then give me a reaction for me to enter. But as you can see, the market did not get to my entry, even though I'm still waiting for it to do its part. And the market has already started moving. So what am I supposed to do? I understand that anything can happen in the market, and I don't have to kill myself. There are other opportunities in the market. So if the market do not come to my POI, I'll probably leave it. Okay, so I cannot just come and enter from here and then start putting my stop loss around here. No, it's a bad style of trading. So I have to let it be and check out for other analysis. Okay, so these are other ones as well. So you have to be convinced. Entering this trade, I think I'm on this trade at the moment. I enter from here, exactly from this particular, after this rejection candles that you're seeing, I enter from there. But before making entries, I've already seen that, okay, this is 30 minutes. This is about how many pips. This is about how many pips stop loss. I am convinced that if this trade eventually hits my SL, I am not going to panic. I'm okay with it. I'm willing to take that risk. Okay, I'm willing to take that risk. So that was why I'm able to take the trade, and whatever happens is no longer what is going to break me down and stop me from moving on. Okay, so this is just the ones I'm looking at on gold. I'm also on this trade at the moment. I enter from here. My SL is just here. And just like I said, all this setup, I drop them on the Telegram channel. So don't forget to join the Telegram channel. And also, if you are new to this channel, ensure you hit the subscription bar, turn on the notification bell so that you can get notified whenever we drop important content like this. So that's that about knowing your risk appetite. So the things I've mentioned so far is, number one, you have to have a good mentor, someone you can always look up to, someone you can always run to. Secondly, you need to understand that anything can happen in the market. The third thing I mentioned is know your risk appetite. Don't risk more than what you can take. Those things are, if you go beyond these things I'm saying, trust me, it's going to mess with your psychology. I've seen people who come into the market because probably what they saw on social media, so they go onto the market and they start stacking position. Before you stack position in the market, ensure that you already know how much you are risking. Believe me sincerely, most of the time, those guys you see stacking position in the market, they don't trade with all their account size. They may probably have a particular account where they want to, like, okay, I want to go hard or go home with this account, meaning they are willing to risk all of that account balance, probably maybe $1,000 account, and they are willing to take that risk. So you see them opening multiple positions in the market using crazy lot size and all. You cannot look at them and then you want to come into the market and do the same. No, your risk appetite are different, and it doesn't mean that what they are doing is wrong. As long as they are not, the thing is not messing with their psychology, they are still on track. That is their risk appetite. To me, I said, if I have let's say I have $100 account, I don't want to risk on a trade. I cannot take a loss of $20 on a particular trade because I am risk conscious. I pay attention to my risks. If I have $100 account, I should not be taking less than $10 loss on a trade. So the moment this happens, it's going to mess with my psychology. And so because of that, I take my time to make my analysis, refine my zones on my entry level to ensure that I have a stop loss that is within my risk limits. So that is that about knowing your risk appetite. Another thing is having a trading journal. When you have a trading journal, you can refer to those things anytime, any day. All right, you can refer to it, try to check what is happening, or the trades you've taken before now, and then you can look at where you are winning and where you are losing. And then you can try to figure out what was happening here. Was I opening many positions here that made me lose so far? Okay, here I was able to make some profit here. But why are my losses more in this particular region? So those are the things that will help shape your psychology, right? Those are the things that will help keep your psychology intact. Okay, so it's very important to pay attention to these things that I've listed before now, and also ensure you stay tuned for more educative videos like this. Very soon, we're going to be having a live class together where we can run analysis together, take setup together, and then we all can be making profit for it. So make sure you get your account funded. If you know you've not registered your synthetic account, the link is in the description bar. make sure you do that and get your account ready for the live class. I'm going to announce it. I'm going to announce the date and when the classes are going to commence, so that we can all trade live and make money together. You can see that my trade is already moving. You can see that my trade is already moving. So if this did not come to my POI and start moving, I'm not panicking, because there are a lot of fish in the river. If I'm not able to catch one, there is hope for me to catch another. Of course, like I said, I missed this because it did not come to my POI. It's not actually that I missed it. It didn't come to my POI and I'm not bothered. But this, I'm able to catch it, and you can see it's already moving in my favor. So that's that about that. So thank you for staying tuned to the end of this video. I hope this video is helpful for you. Don't forget to like and share this video. All right. And if there is a particular video you want me to create on a particular problem you're having as regard to trading, either in synthetic or forex, drop the information at the comment section. I'm always available to attend to you. Love you guys. Stay tuned. Stay blessed.